Forex or
There's the live there.
aha. Now you are live and this is your thing. Send it.
Okay, paste it quick.
Bullshit,
Yeah. The return of the master. I'm just kidding.
Let me watch it.
So back to trading view then.
And you are live now.
I wish to really like see the chat, you know what I'm saying? But it's okay. Clear.
Okay, I am now watching.
Okay. How are you all doing? Is it still morning? Yeah. How are you all doing this morning? So today I decided to go live. You know, go live and freelance with analysis with you guys. I think I hope you'll be happy with that, right? We're going to be just at least back testing. You know, we cannot forward test for now. We cannot forward test. So the thing I'm bringing to the table today is today is about, you know, when you are an upcoming trader and you really don't know how to go about, you know, being big actually or growing in this industry. So what will happen is this. I'm gonna drop this idea, ne? I'm gonna drop this idea for you. Let's say, for instance, you have like 10 US dollars. That's like the minimum amount you can manage to deposit in a month or a week or in 2 weeks, right? So how do you play around this? You will be like, first of all, that $10 could be blown easily. Like it could go in a snap of a finger or in a blink of an eye. That 10 USD could disappear. How? You might be right with the direction, but lose because of a simple retracement or over trading actually. You understand? Let me just make an example on the chart, like click. Okay, let me do this. For instance, let's say you were able to see that here you have your relative equal highs, right? Let me just name that to change the font, the size, I mean, too small. Okay, medium, that's fine. Oh, I forgot. Relative equal highs, right? Or you can just say slash your buy stops lie there. Oh, okay, I want to delete this one. So it's like, you have to understand, guys, this is like my first video. What's going on with these things? Damn, it's like posting the things.
The line itself has a text layout inside.
A text layout. Oh yeah, I can see.
The line and then
It has a text layout, ne?
click on the line.
Okay. Relative equal highs, ne? You forgive me for that. Relative equal. Okay. High. It's two highs, ne? Two or more, I can say. Yo, dude, it's doing the same thing here.
No, just do this. Oh, yeah, ish. You see when you click on the line like this,
Yes.
annotate your words.
All right, thank you. My first video live, so yeah, the nerves are hitting me nicely. Relatively quite high, right? Yeah, this is perfect. So let's say you managed to see that the market, okay, was going for this area here with the stops, and then it hit this area, right? You can see there's a bit of rejection. In ICT style, you might say this is a rejection block, right? So since this is a rejection block, you see a confirmation of your order block right there. there's a confirmation of an order block. You see, what is an order block? The last buying candlestick before the move down, right? The validation happened also whereby the following candlestick closed below the open of this one, right? Yeah, this is an order block. So let's say you see the confirmation of an order block, you are allowed to like sell here. If you see the confirmation, you might sell, knowing that the market might return a bit, then go down, right? So what am I trying to explain here? I'm trying to explain that how are you going to blow that $10 and how to prevent it. So for instance, you saw this setup here, right? You entered a trade. Let me just use this. You say you have a trade here, right? You have a trade. So the problem will be you adding another trade, all right? Oh, sorry. The problem will be you adding another trade, and you know what else you'll do? Add another trade here, right? You'll add another trade. That's a problem. That's a problem. That's a big problem. But in this case, there's no huge retracement that's going to kill you or take you out. You understand? So you would have managed to be profitable if you had entered and re-entered and re-entered and saw this nice fair value gap here. We just do this. Okay. You have your order block, right there, right? And then there's this tiny one, which is the market did retrace with this candlestick into that order block, then went down. Then you have your nice fair value gap here. You see, should I let me do this? FVG, your fair value gap size 14. Okay. You have your FVG there, right? Why is it sticking though? Okay, yeah, let me continue that. You have your order block. That was gonna tell you that the market is gonna go down, right? You have your breaking market structure here taking place. And you have this tiny little, we have this tiny little order block here. It's also valid. You can count it, because the market would have returned to that, then go down, right? Yeah, then you have your fair value gap here, and there's a lot happening. This is like a consolidation of some sort, right? A consolidation where the market did what? Went down, with a big move, then kept on going down, retraced into what? I think I'm seeing like characteristics of like a market maker, if I'm not mistaken, guys. But yeah, I think I'm seeing characteristics of a market maker where you have your accumulation and everything that follows. Yes. So my target would have been this one in this case. You see? My target would have been this one. So it's complete. It is complete in my eyes. MMS M, yeah, market maker sell model. You see. So in this case, there's no retracement that would have blown you if you had many positions, because like with small amounts we tend to like over trade or overload our trades with positions, hoping that the market would at least flip that amount into a greater deal of money, you understand? Because if you had like made, let's say, use the micro account and entered here with like 0.05 and another 0.05 and another 0.05, when it got here, definitely you would be running around 60 to 70 USDs, which was not going to be a problem though. So let me look at another setup. Yo, dude, how do you make it not stick?
I know.
Because it's sticking, you see. If I'm gonna do another one like that. Yeah, that's the problem. Yes, you see, shit. Do what?
Select the pointer.
The pointer?
Yes, just click on it. Yes.
Oh, that's nice. Okay, good shot. All right, yeah, let's go into this trade. I was actually in this trade. Let me show you. 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 Doop. Yeah. So in this trade here, okay, in this setup, let me just say setup, right? In this setup where the market spiked down, I was in it. I had like a few positions here. I can say around maybe 10 0.01s. Yes, I had 10 0.01s in here, but the market didn't kick me out here. You understand? The problem is like when you have small amounts, you don't really. I cannot say you don't know how to trade. I can say the market feeds out of you. You understand? Okay, let me annotate this one. I can say tiny little order block. Yep. You see? Yeah, so I click this. But if you look closely, there's like sort of, it looks like a small consolidation here, right? Which is like the market did go onto that, then go down, started going down, right? Yeah. And okay, we have that. Optimal trading entry, let me write it. OTE. I know OTE happens like, oh shucks. I know that OTE happens like during the New York session. OTE. But it's not always that case, you know. And then, yeah, let's say you have your selling output. Oh no, I don't think I put that right. Let's say you have your trades here, right? What's happening?
Give him a shout out. Give him a shout out. Give him a shout out.
Who there?
It's Raymond Kojo. Raymond Joe. I don't know who.
Where?
On your chat. Just give him a shout out.
Oh, thank you, Raymond. Raymond, thank you very much, man. I cannot pronounce your surname, Njoku. So yeah, basically, I just decided to like, okay, I'm gonna start doing live streams, you know, and talk to you guys. You see. So yeah, okay. Let me finish up. So if you had like $10, you wouldn't wanna risk too much, right? You don't want to risk too much because you don't also want to lose too much, right? So the only way if you are going to manage to do that is to at least have 3 positions there. You just advise use a micro account. With $10 you can achieve a lot. You understand? You can achieve a lot, you see, with a micro account. Use a micro account, you could have placed 3 selling positions here, right? And this was like London session, so you could have had like 3 selling positions here. Market moves down, retraces. Those 3 positions wouldn't kill that that $10, right? Continues down. What do you see? What do you see? Wait. What do you see? You see a breaking market structure right there, right? Okay. See a breaking market structure, BMS right there. Oh no. Yeah, the BMS right there. Yeah, that is so perfect. And then you have your fair value gap, or should I say imbalance? Yeah, you'll decide which one to choose. Here, FBG. This is your imbalance, your fair value gap. But also again, this looks like a market maker sell model. You understand? So let me try to show you. I think I did post a video, YouTube, on YouTube when I took a trade here. Let me refer you to that video, guys. Yeah. Okay, the video is using the little I learned from ICT, right? Yeah, it's a short. You can search that on my channel at Forex Order. Yeah, you can search that. You will see the video whereby like I decided to deposit like 20 bucks, 20 ZAR, because I'm in South Africa. I decided to deposit 20 ZAR on the Thursday last week, and then I flipped that 20 ZAR. I don't know how many times. I like made 200 and something bucks, you see. And then I was like, okay, that was good. So if you can manage to flip 20 ZAR to 200 and something bucks every day, or at least 4 times to, or 1 to 3 times in a week, you'll be fine. You'll be able to get yourself a snack, or you know, buy that one girlfriend of yours something nice, you see. Check this out. We have a very nice reaction here, right? We have a very nice reaction here, but after hitting this area, sell stops. Did I call it sell stops or relative equal lows? I don't know which one to call it, but either one. Excuse me. Stops. No. Stops. So guys, I didn't like really plan for this today, but yeah, you'll have to forgive me if I spoke of one thing and then dished it, and spoke of another thing and then dished it as well. So yeah, you have to forgive me once more. So this looks like a market maker sell model in my eyes, right? Right? Yes. So check this out. To show that this area really had sell stops, what did the market do? The market came down here and hit this area, and then validated an order block. After validating an order block, what did it do? It went up, right? It went up like this. So if you look closely here, in the lower time frames, what happened? It opened this candlestick here, came dipping itself inside the open of this last selling candlestick here. So this was another buying opportunity if you were willing to take the risk, right? So it hit this area here, collecting the stops, moving up, right? And then in my eyes, it moving up, it wanted to fill this area here. Let me outline it for you guys. So I think you can all comment on what you really want to see next on the next live video, the content you want me to bring out to you. But I hear most people complaining about like the daily buyers and stuff. So I'll really try to formulate a video that's going to help you out with that. So look at this. When I recall properly, ICT didn't really say like the market will always return inside the fair value gap. It could choose to go a bit above. You know what I'm saying? It could choose to go a bit above that fair value gap. You understand? It could choose to go a bit above. Then what happened later on? It went down. But I had exited my trades with a stop loss here, right? With a stop loss here. So yeah, I think I'm doing much. Wait, is that much though? Yeah, okay. Let's look for another setup we can analyze together. Overall, again, check this out. Let me remove all the drawings for you guys. Check this out, guys. Like, check this out, honestly speaking. This is like on the 15 minutes time frame, right? Yes. Why am I not starting from the daily, going down the top to bottom analysis? No, guys, we do things differently. So I like to trade in the lower time frames, 5 minutes, 15 minutes. I no longer look at the 1 hour, nor the 4 hours, and also the daily. It's because of specific reasons, you understand. And my trading time is the London session. The London session. In SA, I think it's like 9 a.m. It's 9 a.m. to 12. Yes, I find that window period very useful. Like, it's super useful. You understand? So let's see. What does this look like? Okay, it didn't touch it here, but let's move forward. It did touch it today. Understand? What does this look like in your eyes, guys? What does this look like? Don't tell me you don't see what I see. Let me write it in big letters. 40. Market maker. This one is making noise. Doo-doo. MMS. Market maker sell model. And most of you guys have forgotten about like market maker sell model. You always remember, you're always looking for the fair value gaps and all those, but you forget about the bigger guys like the market maker sell model. You understand? If you haven't like watched the market, if you don't know what the market maker sell model is, you can just directly go to ICT's YouTube channel and like go through a series. There's a series there, and I'll try to also make a video on the market maker sell model, or the buy model, and how you can actually trade it in a way, right? So yeah, this looks like a market maker sell model to me. To me, guys. So what else can we look at? What else? Okay, I have something I want to say here. Let me just do this. That's something I want to say here, right? Go down to the 5 minutes. Where are you? I'm looking for you. Where are you? Okay. 15 minute time frame. Let's outline that order block so we can know where it lies. Yo guys, you can also follow me on Instagram, I got like an Instagram account. You can follow me on Instagram at Forex_order. Yeah, I bet I'll be seeing some new followers today. Yeah, let's continue with the analysis that we are doing. I think I should drop these 2 live sessions in a week. So yeah, let's go to the lower time frame. Move. Check it out. So it means this from here, this is our order block, right? Market went above the order block, retraced into it, right? Wait, before it could retrace into it, there's this one here. Let me see where the 15 minutes candlestick ends. If you like put a horizontal line, it's gonna show you 5 minutes. Okay, this is where it starts. Okay, I think it ends here. 5, 10, 15. Yeah, I think our 15-minute candlestick ends here. So there was a candlestick that went lower. How? Let me see. Oh yeah, this one is that candlestick. That 5-minute candlestick lies within this one, which went lower, but closed where? Above our order block, right? That is the validation. If you don't know what a validation of an order block is, let me say it once more. Last selling candlestick. Let me remove this guy. The last selling candlestick, is the order block, right? But how do you know? You know it when the following candlestick right after the last selling closes above this last selling candlestick. See, when it closes above, that's like the validation of the order block. You understand? That would be the validation. Then after, what happens after this candlestick, the one after the validation of the order block, this one here, that's what opens, right? It opens, but it gets inside the open. Wait, I highlighted the high, which is also fine. It goes inside the open of our order block, and then ICT said like you can buy. In that case, yes, you can buy. So what happened? It dipped itself inside, and you are going to anticipate a buying scenario, right? Which is if you would have bought here and put your stop loss at least here or below this, you are going to be fine. The loss was not going to be, too big. You see, you are going to manage with a minimum lot size, though, not a crazy lot size. Which is, if you have the funds to, do that, you are going to be profitable as well. I'm not gonna hold back, Raymond Njoku. I'm not gonna hold back. Gotta give the secrets to you, my man. So feel free. So yeah, where was I? Yeah, you put your stop loss here, at least. Because what I noticed is like, if you really, let's say there's an order block like this one, then you put your stop loss right here. The market, the following candlestick that's supposed to validate that, could, violate you, then go close above. You understand? You don't want that to happen to you. So even this one could do the same thing. Go down, kick you out, destroy you completely, then move up, right? So yeah, this one did itself. You could have bought here, and you are going to be profitable. Let's go to the 5-minute time frame. See, this one dipped itself inside. Also, this was a perfect scenario, guys. Moved up, and then there's a favorable gap which the market consolidated in. Then this is like a consolidation. You know that. You know this concept. I don't know whose concept is it. I think it's ICT's with liquidity stuff. Yeah, where there's like a consolidation of some sort, and then the market going above that consolidation, then going down. You understand? Try to look at this. Right? This looks like that consolidation, and this looks like when the market takes it out. You understand? Went up, came back, and didn't go above this, and went down nicely later. You see? So, guys, today was a test drive of the live video. If I can really do it, and if I'm comfortable enough to keep on doing it. See, don't forget two things. Oh, I mean 3 things: like, comment, and subscribe. I'll be dropping more live sessions like this every single week when I get the chance, and I'll be bringing something new to the table every time. So stay on the channel. Okay, how do I end it?